Hello and welcome back to Smart Credit Bytes. I'm your host Sangeeta Sharma, and as always, we are here to simplify MSME finance and help both entrepreneurs and bankers make smarter credit decisions. In our last episode, we dug into Sibyl how your credit score really impacts your funding journey, and I got such a great feedback from many of you. Thank you for sharing and spreading the word. But today, oh yeah, Today we are going inside a document that most people never read carefully. They think, okay, sanction letter मिल गया, मेरा तो लोन sanction हो गया, काम खत्म. I have heard this lot many times from the businessmen, a lot many times. But let me tell you, the sanction letter is not just a loan approval slip. It's your contract, your rules of the game, your financial bible for the next 5 to 10 years of your business journey. And inside it, hidden between those neatly typed lines, are conditions that can either support your growth or choke your business silently. Yes, I'm saying it correct. It can also choke your business silently. So, today, let's break open the sanction letter line by line and uncover the hidden clauses every borrower must know. Stay with me till the end, because if you miss even one of these points, it could cost you lakhs or even your entire business relationship with your bank. So just stay, just give your 10 minutes of the day to me. Now let's start from the basics. A sanction letter is the official document a bank issues once your loan is approved. It details the terms, condition, amount, obligation of both borrower and lender. From a banker's side, it is a Bible, a reference point of safeguard the bank's money. From your side as a borrower, it should be your rule book, because every repayment, every compliance, every discussion in the future will trace back to what's written here. But sadly, most borrowers, especially MSME entrepreneurs, treat it casually. They skim through the loan amount and EMI schedule, sign and move on. Later, when a clause backfires them, they say, आपने तो बताया नहीं था, आपने तो सिर्फ मुझे सैंक्शन लेटर दिया था, हमें तो पता ही नहीं था, हमें तो किसी ने भी नहीं बताया. But you know what is the truth? Truth was written in that sanction letter. We just didn't pay attention. So from this moment onwards, I want you to remember this golden rule. Never, never sign a sanction letter without fully reading and understanding it. If any word confuses you, just ask the bank manager, ask your credit officer. They will explain you. This is their duty. If you feel like that you can't comply any condition, just ask them to change it or work with them to comply it. Now let's walk through the common sections of a sanction letter. So the first part of the sanction letter is about your details, basic details, your borrower detail, your address, your registration number, your date of incorporation. Then let's go with loan amount and purpose. This is straightforward. How much you are being sanctioned for and for what purpose. Let's take an example. Suppose you are sanctioned 50 lakh working capital limit for raw material purchase. But here's a catch. If you use it for a different purpose, they say you divert it into buying property. You are in violation, and yes, the bank has the right to recall the loan. There is always a point there. The bank can recall it anytime. Next part comes is interest rate, the most important part. Fixed, floating, or linked to repo rate. You must always know. Let's take an example. Repo plus 3% means your rate will fluctuate as per changes in repo rate. Many borrowers happily sign, but when interest rate rises, they panic. Please don't be that person. Next comes is your repayment schedule. tenor, EMI, moratorium for term loans. This is critical. Suppose you have 12-month moratorium. That means you will only pay interest for 1 year, and then your actual EMI starts and that hits. The next part comes the in sanction letter is your security and collateral. Which property, which machinery or receivables or your stocks are being pledged. Sometimes the sanction letter has a general clause, such other security as may be decided the bank. The security can be in future also decided by the bank. This vague line can create trouble later if the bank asks for more collateral. So always read it, ensure there is no such line. Now next part is guarantees. Who is giving personal guarantee? Often when you're a business owner, you don't realize the depth. If business default, your personal assets are on the line. Yes, because being a promoter, your personal guarantee is always taken by bank. If you don't want to give your personal guarantee, you can always ask. You can discuss them prior to loan or prior to signing your sanction letter. Insurance requirement. The This is the next part. The banks require stock, plant, property to be insured. All the assets are required to be insured, whether these are movable, immovable, and the bank application. It must bank should be the beneficiary. If you don't maintain this, it is a big non-compliance treated by the bank. See how even the simple clauses are not that simple once we open them. So now let's go to the hidden part, the most important section. These are the hidden red flags that you people that MSMEs often miss. The prepayment penalty. Many banks insert a clause that if you repay early or shift your loan to another bank, you pay penalty. Ima- uh, let's imagine you get a cheaper loan, but you can't exit without paying lakhs. Yes, there are many times the bank mentions penalty. I've seen, especially in these your private banks, the maximum or your funding company they mention that prepayment penalty of 2% even after 1 year if you repay the loan, due to which many of the loans are not taken over by the government bank. In the rare cases I've seen in any public sector bank, they mention prepayment penalties, but in private bank or maximum in the fintech companies, this clause is very often mentioned. So always check your sanction letter. Now, next part is conveyance. These are the promises you must keep during the loan. For example, bank will say, always maintain your current ratio above 1.33, never increase your debt without bank's approval. You cannot withdraw excess capital without bank's approval. If you even break one convent, the bank can technically call you as a defaulter. I think you have never read this your sanction letter. This is the one of the important part. Next red flag is inspection rights. There is a column the bank can enter your premises anytime, check your stock, inspect your books, and they will, especially during stress. If you have not maintained proper records, it could lead to trouble. Now, next red flag is change in on ownership restriction. Some sanction letters say any change in promoter shareholding requires prior bank approval. Yes, you cannot change shareholder pattern without approval from your bank. If you sell a stake or bring new partner without telling, your loan can be recalled by a bank at any point of the time. So prior to changing your ownership or shareholding pattern, just take a simple approval from your bank. Next red flag is cross default clause. This is very dangerous and you must know it. If you default even one loan, even from another bank, this loan can be treated as default. This is the chain reaction. Next red flag is document compliance. Sanction letter says loan remains conditional until full documents are submitted. Yes, your loan, you will not get actual money until you submit these documents. and these are maximum in your preconditions. Many entrepreneurs think sanction means disbursement is granted. No, it is not. Again, I'm saying no, it is not. If you don't complete your documentation, NOCs, insurance, GST return, disbursement can be withheld, and sometimes it is also cancelled due to non-compliances and non-submission of your documents. I just remember a client who got a 2 crore term loan sanction. He was thrilled, even celebrated. But when he delayed submitting factory insurance, the bank held back disbursement for 2 months. By then, this machine supplier backed out, and the business opportunity was lost, all because of one overlooked clause. Okay, now let's flip the side. As a borrower, what must you do before signing document? I'll give you a small checklist. You can say this is your sanction letter checklist. Read line by line. No matter how boring it feels, as a banker, it is our duty to explain you each and every words. Ask them to explain those tricky words, those banking words. Never feel shy because this can cost you. Match with your loan application. Is your amount purposed in your the same? Clarify the gray clause, like additional collateral if required. What does that mean exactly? Ask your bank and ask them to simplify it in a sanction letter before signing it. Get everything in writing. A verbal assurance doesn't count. If your banker says, no, we will do it later, no, never say, you can give me in writing, then only I will sign the sanction letter. Store the signed copy safely. Treat it like property papers. Yes, remember, prevention is always better than litigation. Okay, let me also put my old banker's hat here. Why do banks put these clauses? They are not just here to trap you, but because banks are handling depositors' money, they need safeguards. So, a sanction letter is not a punishment, it's a risk management. The problem arises only when the borrower don't read, don't understand, and later feel betrayed. So, here's just mark this golden rule. If you don't understand it, please, please, again, I said, please don't sign it. So, friends, today we went deep into the sanction letter, from simple clauses to hidden red flags, and finally to our checklist as a borrower. Remember, credit is not just about how much money you get, but also about the condition tied to it. A smart entrepreneur doesn't just chase the loan approval, they master the fine print. In today's episode, I hope you get everything you were searching for in a sanction letter. If today's episodes gave you clarity, do share it with another business owner or your fellow banker. Let's spread financial freedom wisdom together. And don't forget the next episode of Smart Credit Byte is going to be even more eye opening. Until then, stay wise, stay credit smart. Thank you. Thank you.